Hey everybody, welcome back. One of the things I get asked often is what is the difference between value investing and growth investing, and where do I sit? Remember, I term what I do convexity investing, basically getting a nonlinear response to an input. In this case, an input being an investment. So I like, by definition, buying things cheap relative to that convex payout, right? I think about things that have convex payouts related to the investment. Call options or things that behave like call options are convex if well designed. Put options can behave that way as well, right? In terms of getting paid for protecting a portfolio. You pay a small amount to get a very large impact. But let's go to value versus growth. I went to the source, ChatGPT 4, to ask from the standpoint of a world-class finance and professor, can you explain in 100 words what value investing versus growth investing is? So this is what you hear from ChatGPT. Uh, Value investing focuses on buying stocks that are undervalued relative to their intrinsic value, often determined through fundamental analysis. So far, so good. Investors in this strategy look for companies with strong financials, but whose stock prices are lower than what they should be, hoping the market will eventually recognize and correct this undervaluation. So far, very hard to disagree with this, although I would say uh, sometimes investors in this strategy look for companies with not such strong financials, but often some kind of hidden value. Often the financials don't, on first glance, look perfect, but for instance, in the case of old-fashioned Ben Graham cigar butt investing, you'd find a company that had very large amounts of current assets and that could be liquidated, even though the going concern wasn't there. You could liquidate the current assets, less the current liabilities, and have something that, in the case of liquidation, would yield something higher than what you paid. According to ChatGPT, growth investing, on the other hand, targets companies that exhibit signs of above average growth, even if their stock prices are already high. So, in this, you are not necessarily paying attention to intrinsic value discounts. You're paying attention to the above average growth. Growth investors are less concerned with current valuation metrics and more with potential future earnings and revenue increases, betting that rapid growth will continue driving the stock prices even higher. So these two things, value investing and growth investing, at least according to ChatGPT, but also according to a lot of the literature out there, and my experience, is really defined. The difference is defined in the elevation of the stock price. Value investors do look for growth, and growth investors often look for discounts. So that's where there is a blending of these two things, right? And in fact, people look at what has been termed GARP, growth at a reasonable price, as the synthesis of these two things. But as someone who squarely sat on the side of the value investing camp, I just like to buy things that are cheaper than what I determine the intrinsic value to be. Some of the best, as Munger has called it, Lollapalooza returns have come from correctly identifying that there's great growth ahead, but that the market isn't correctly paying for it, right? So be careful adopting a moniker of value investor versus growth investor, because there were times where you could have bought Amazon, Microsoft, Apple, even NVIDIA at what would be classified as value, even at the point where you saw it. I mean, in the end, underpaying for a growth stock that grows a lot, you did make the bet as a value investor would. But in both the cases of value and growth, it's getting more in the future for what you laid out in the present. So sometimes I think people get too hung up on value being the realm of people who like to buy lousy companies at good prices, and growth always being people who trade momentum. I think there is a synthesis between the two because, as Buffett has said in the past, they're joined at the hip, value and growth. Of course, putting myself in the camp of convexity investors, I think there is really a third way, and we'll talk about that going forward. Thanks for joining. Enjoying some coffee right now. It is Starbucks coffee, which I write about in my book. The value investment that ultimately turned out to be a growth investment that is known as Starbucks. Stay tuned and talk soon.